Hey, what's up, everybody? So we have episode 59. It's Tuesday. I'm going to speak a little slower today because I'm losing my voice. So this morning, pre-market, we were all waiting on the CPI numbers, which we thought would spike a little. So I reported, yeah, they spiked, but the market didn't give a shit. So everybody's like, yeah, it did. It threw up throughout the day. It threw up at the end of the day. There were so many stocks today that had more inflow than outflow. So many stocks today that went down but had demand. So yeah, I think today was just a hiccup. Remember, I mean, people are so soon, or they judge so quickly. Remember, we're at all-time highs in the market. All-time highs. Yes, it is strong tech that is taking us there, but understand that. So the market had two directions. Ready? So many stocks were red and negative, but there was inflow. So it tells me that consolidation is going on, which means we find a new low and we find a new bottom. For me, I'll use an example. I think Carnival lost a bunch of money today. I jumped in late. All right, I'm still down 10% on my new position, which expires on Friday, but I'm looking for a quick pop. So I bought, what was it, $22 options. I think the stock is $23, or maybe it's a little under 23. Point is, I paid up. I think I paid $1.10. The closing price was maybe 99 cents. So I'm down 10%. It's okay. I set myself up for what I'm looking for. I also entered into a UVXY put, or a few of them. I entered in right before the close when it was $28. I alerted. Now, this is my first position. Should I need to, I'm ready to buy 3 more positions, if not 7 more. All right, so you have to have a strategy. But I expect the UVXY to go down. I expect futures to be okay. The market always over dramatic with whatever it does. So for me, when the CPI numbers came out and the market took a tumble this morning, okay, I said to you guys, it was retail traders. It wasn't the institutions. When the market was throwing up on itself, institutions were buying. Now, when did institutions start selling today? Does anybody know? 1 p.m. Why? Because the 10-year note spiked. So when I told you this morning, as long as the 10-year note sits between, and which tells you in inflation, as long as it sits between 134 and 138, we're good. It spiked to like 141 or 142 around 1 p.m. So that's when the sell-off started, okay? It didn't consolidate, meaning the interest rate or inflation rate didn't go down the 10-year. That's why the market didn't turn around like I thought. I thought it would recover and that it was overdone, and I still think that. So I think we're going to wake up in the morning, and I think the 10-year will be more like 1.38 or something to that extent. Now, remember, the Fed talks tomorrow, so there's a lot of fear or concern in the market. So people are like, I'd rather just sell my positions and wait on the side. And I'm going to talk about selling your positions for a profit. Please, because I had a light bulb moment again today. I lost a wager over the weekend when England lost to Italy, and I gave this platform member of mine like a 30-minute lesson today, and he's newer to the market, got involved in January. So I'm going to share with you his questions and what we spoke about and the light bulb moment he had because he didn't understand it. So if you're exactly like brand new to the market, like January, February, maybe last year, stay put, because I'm going to give you examples of how you probably trade and you don't understand what we're talking about when we say buy it on sale, okay? So real quick, if you like what you hear, I'm going to ask you to give a thumbs up or subscribe to my platform, okay? Because everything I do is organic. So here it is, planning ahead to him. So I said to him, as the stock is going down, we're planning ahead to buy the option. So the option might be $3, but if the stock is going down, we're going to pay like $2.40 for the option, but we're going to watch it and try and grab the bottom. And he said, every time I do that and I see it bottom out, it bounces up quickly, and then I put in my bid. And when I put in my bid, I put in it 10 cents or $10 cheaper than the ask, right? So he's saying it never gets activated. It never gets executed. So I said to him, no, that's not what I mean. I mean, when we plan ahead, here's how we plan ahead. So you go pre-market and you say something like, whatever stock it is, let's go with Carnival. You say to yourself, it's going to be off 5% today. So it's going to fall $1.44. Then you look at your option and you look at the delta of the option you're looking at. Let's say it's the $22 calls. And you say, if it falls $1.44, multiply it times the delta, and you'll see where your option price will fall. So let's say it's a $3 contract and you're going to pay $300. You don't want to pay $300. You put in your bid at like $205, $205. So you're looking at like a 45% discount, okay? You're planning in ahead for the worst possible thing to happen to Carnival. And when it does, you're there to pick up the pieces of someone selling it to you. So he kind of understood. And what I explained to him is I said, he was talking about Apple. So he pointed out 2 positions he has. This is great. Look at the 1-month chart because the positions are killing it. He said he's in Apple and Oracle. Both charts look phenomenal for the last month, but yet he's losing a few percent in each one. So I said, tell me a little more. So he said Oracle. He's $5 out of the money and his option expires on Friday. I'm like, dude, you're correct about the stock, but you're losing money. Apple, what's your call? What's your strike price? He says 149 expires Friday. I said, dude, you can't do that. He had $1,000. He's got 4 different positions, so he's spread too thin. So when I talk about for days, don't spread yourself too thin. That I like to be in 1, 2, or 3 positions going forward each day. If that, all right? I like to have my money on the side and execute trades, have strategy, and secure profit. So the point was, he's got so far out of the money options that even when he's correct about Oracle and Apple, which are killing it lately, he's not seeing his options make money. He's down a few percent, and he's losing $8, $10, $21 per trade, rather than if he just bought one Apple option, let's say, at 144 and it's in the money, and Apple spikes up to 147 like it does today, he'd be positive like 30%. He could secure profit. I don't care if it's a few $100s. It would probably only be $100 for him. The point is he only has $1,000 in his account. So he's spread in 4 positions. He's spread too thin. Same thing with Oracle. Oracle's like at $88, $89. Looks beautiful. His calls are at $92.50 expiring on Friday. So he needs it to pop $7 to like 94 to absolutely crush it. It's not going to happen. Oracle chart looks amazing, but he's crazy. He picked a good stock. He's got the wrong strategy. All right. All right. Now let's talk about my strategy. Okay. My strategy, I love patterns. I love volume. I see demand, but patterns I love. Patterns, I'm obsessed. Okay. So what do we all know about STX? STX spikes when the market opens. Boom. And then throughout the day, it travels down. Today, it shows some support and went back up. But what did I do? I sold, I bought back in on the dip, and I'm still holding. I wish I had sold again because I would have got like 50 more cents per contract. The point is, you go in, you exit. If you can day trade, you go back in, all right? Simple as that. You plan ahead, all right? What else did I do today? I bought some AI to average down. Not great, but transparent. AI looks shitty right now. What looks decent? Square still looks decent. NET looks decent. D-Dog looks decent. Oh, eBay. So I went into eBay. When eBay turned positive, it was up like 40 cents. I sold my options. Yes, I know eBay sold off and then went down like 30 cents or maybe even only 20 cents. The point is, I took profit. If you're part of my platform, if you're not part of my platform, whoever you are, you better learn, smack yourself, because you better learn to take profit. It's the whole thing about investing. If you ride up the elevator, and I showed a position today in STX where I didn't sell yesterday, and it started today down here, and then it recovered, and I turned green for the day, right? And then I sold, and then I bought back. But the point is, if you don't, you ride the elevator. You go down, you go up. All right, so I told you not spreading yourself too thin. I spoke about that the other day. Now let's talk about AMC real quick, because I've been getting a lot of shit about AMC. When it topped out at $72, I came on, I did a live stream. I said, AMC, run for the freaking hills, take your profit. Now, it doesn't mean I don't support the apes, right? The AMC players, the short squeezers, whatever you guys want to call yourself. I support you. So please don't get me wrong. My point is, if you sold at 72, now I mentioned buying back at 52, but let's say you bought back at 42. You saved $30,000. Let's say you bought back today at 38 or 37, where it is now. Let's say you held till 37. You sold it at 72. You bought at 37. Whatever number of shares you had, this is the greatest thing. How do you support your stock? Whatever number of shares you have, you now have double. So if you had 1,000 shares and you sold at 72 and you're buying back at 37, guess what? Now you're buying 2,000 shares. Talk about supporting your cause. Everybody says buy more shares, buy more shares. Yeah, buy more shares by investing smartly. Sell your AMC when it spikes. If you want to buy more shares, great, do it when it dips. Same with GameStop. I mentioned this at $306. Where's GameStop now? $180. So it's off $126, which is what, 40%. So imagine this. You had 100 shares at GameStop. You sold at $306 when I warned. All right? You still want to support the cause. Now it's down at $280. What are you going to do? You buy 140 shares. You just made 40%. You don't have to ride the stock to the moon to win and make money. This is what I'm telling you. Even if you're an AMC, GameStop, I don't care. But AMC dropped another 7 or 8% today. That sucks, bro. That's not a movement. That's like a disaster. It's like a snowball every day. And you lost 7.5% yesterday. Oh, let's talk about what made an offering today. ChargePoint, pre-market, 4% off. I said ChargePoint's doing an offering, probably going to drop. Where did it finish? Down 10%. Offerings are bad, okay? There's no doubt. There's an offering for Space. Space is $40 pre-market. I said Space, also an offering. They did it yesterday. That's why they were down 17%. Richard Branson got you $500 million worth. And people say, oh, it's a secondary offering or this, that. It doesn't matter. Whatever the offering is, it's bad news for every single company that is an offering. They are raising money. They are diluting the company. Offerings suck, okay? If that's the only thing you get from my video, first give it a thumbs up and then tell me offerings suck. Oh, for the one dude or for the three dudes that give my videos thumbs down, dude, don't watch my videos. Find something better to do. Go kick a can on the street, kick a cat, whatever it is. I mean, I like animals, so don't do that shit. But what the hell are you doing watching my video for an hour? Because I know how long you watch, and then you give it thumbs down. I mean, every thumbs up or thumbs down is good for analytics, so I appreciate that. Now, let's talk about my platform real quick, all right? Maybe you need my platform if you feel like the market's beating you up every day, okay? Every day, yes, you might need some other people to help you, to advise you. Now, I'm not telling you it's me, okay? The great thing, and I'm going to show you slides in a little bit, is people are making their own stock decisions. I'm not putting you in a specific stock, and then you're showing me returns. You're showing me, hey, Matt, I was planning ahead, which is what I'm talking about. I waited for the dip. Somebody scare sold to me. I'm currently up 40%. That's what we do. We buy cheap, and then we sell. We don't care who's selling us the contracts. We don't care who's buying the contracts. That's what we do, okay? My platform's $3.49. If you need help, if you need guidance, I suggest you give it a shot. If you don't want to, I don't care. I don't force anybody, just like I don't force anybody to watch my videos. The people that are here, I understand you want to learn. The people that watch it, even if it's on the replay, I thank you as well, because the amount of time that you put into these videos and watching it is going to make you a better trader. All right. I make comments on the section on Webull. Somebody who does not follow my platform thanked me from one of my YouTube videos. So he's not on the platform, but he's on the YouTube video. He averaged down. He bought one contract, bought two more, and then he sold for a profit. I forget the stock. But, man, I wish I remembered. It was great because he's probably watching, and I wanted to give him a shout-out. So, again, my community is $3.49. If not, the least you could probably do is subscribe to my YouTube channel and make sure you push the notifications so you get notified. All right, let's see some slides so I can tell you guys what I'm trying to share today. All right, here it was. Charge point, secondary offering. Yeah. So somebody's like, yeah, it won't affect dilution. Okay, it was off 4%. It finished off down 10%. So 6% if you're in shares that you could have saved. And if you're in options, you could have saved 50% or made 50%, okay? The point is offerings are bad. I don't care what somebody says, secondary, blah, 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 whatever. It's bullshit. It goes down. Space, same thing, right? It went down 17% yesterday. People are like, oh, it's done. It's not going any longer. It's got support. It's going from 40 and up. No, space is like 37 and change probably after hours. These are all predictions. I don't look, okay? I look when you guys ask me questions. Let's get another slide on there, please. Okay, this was great, all right? People follow me from all over the place, platform members. This dude, and I really appreciate this, okay? He's a field manager, works with Dell, so obviously a smart dude. Zero experience in the stock market, okay? I don't care if you have zero experience or 20 years. Point is, he's understanding how the market works and how to do anything in whatever position he finds himself in. We have strategies for everything, and my teachings do work, okay? If it's red 18 days in a row, I can't control that shit. But when we had a green day yesterday, yes, averaging down works. Using my rules work. You don't get yourself in trouble. Let's get another slide. Oh, somebody else. Yeah, somebody else, man, you're good. Thanks for your knowledge. Do you see? So I look at the market differently. People acknowledge it. I appreciate being acknowledged. That's it. $3.49 is what I asked per week, but I appreciate being acknowledged. All right, next slide. In fact, it's a known thing. If you have an employee, right, and you tell them they're doing a good job, they are so much more satisfied than even if they got more money. I know it's crazy. I would take the money. All right, now I'm telling someone, trust the process, okay? This dude reached out to me on the side. He's in a stock called FIGS, F-I-G-S, not my stock, okay? Which is what I say. It's great. He bought the dip. He was up like 200%. We reached out on the side. I said, make sure you secure profit. What happened to FIGS? It dipped after. I think he got back in again. At least that was the plan. All right, next slide, please. It's a process. You trust the process about averaging down. That's what we do. Okay, so everybody knows I love to talk about STX every day. STX, I know two things, and I've said it for a week straight. STX is going up, and the UVXY is going down. Why do I know this? Because STX has demand. In fact, I think today turned into an inflow day, maybe an outflow day because there might have been selling again. Point is, stocks I don't give, or ETFs I don't even talk about. If you do the right thing, and on the spike, he's buying puts, he's up 46%. Great. I don't have to give you that I think tech is going higher. You figure it out for yourself. You use the strategy, you average down, and you crush the market. This is what we do for $3.49. Next slide, please. but that was funny. No STX. All right, eBay. Okay, so I mentioned eBay. Who saw the morning dip? If you didn't, look at the one-day chart. We prepared for that morning dip. There it is right there. I see it on the chart. When it spikes, you have 2 chances here to sell. You might have had 3 chances to sell. I unloaded my eBay options. So people say, oh, you leave bag holders or whatever, or then maybe they think that. That's not true. What I say is plan ahead. I want to be out on every spike. It could be my favorite stock, right? STX, when it spiked the second time during the day and the UVX was spiking, I said to everybody, please make sure you secure profit. So STX was $89.18. I exited out my position that expires Friday. My other options I'm holding because I don't want to guess or gauge or time the market. The point was, I'm out. I'm going to go back in tomorrow. I couldn't be more happy. Next slide, please. You secure profit. All right, STX, this is the other day. So I'm just showing you every time that it dips and it looks like it's shit and falling apart, there is support, okay? That was it. I think this is from yesterday I shot. Anyway, next slide, please. All right, you did the same twice this week on STX. Yes, so you exit out instead of riding the elevator. Now, I showed everybody this morning how one of my positions for STX rode the elevator, opened up down this morning like 30%, and then made it all back and then some. This dude, instead of riding the elevator, made 30% yesterday and 46% today. He's up 76%. Me, I made 2%. I made 4%. I mean, it just makes more sense to get out, which is why I did that again today. And I did it 2 days ago. On Friday, I got out and got back in Monday. All right, next slide, please. All right, more people using this strategy. MU, similar stock to XTX, right? Micron got in on the dip, right? He sold the position for a 20% gain, or he sold it end of day and he bought it back 20% cheaper. So let me explain that to everybody real quick. Say you have a position, you sell the option for $1, for $100. You buy it back tomorrow for $80. Guess what? You still saved $20. You didn't make $20 from it going up, but you added to the value of your position. So when I say sell it at the peak and buy the dip again, don't tell me, I just don't even care. I'm just going to be in the position. I don't care, because that's bullshit, man. Next slide. Anybody that says that, you're not trading. Sorry to call you out. Okay, Roblox. I got in it at 84, actually 83, 79 or 80, 83.80. I tweeted out, hey, I got in here. I think it should go north of 85, maybe 87. Okay, Roblox, I think it finished at 84.13. So I'm not killing it, but I've got such a great entry point that I'm protected on the downside. So when I tell you risk versus reward, I'm looking for the best entry point. And then remember, you have to sell with profit because you can enter again. Anybody that rides it up and down like a yo-yo, elevator, escalator, whatever it is, bungee cord, you're fooling yourself. You're not trading. And I don't care if you only have 3 day trades in the whole week, then you better make those 3 trades, if they are day trades, successful. If each one of your trades, your 3 trades, returns 50%, even if you enter the right way, like a quarter of your money, okay, you have $1,000, you buy one option, but you return 50%. You know what you're going to return on the week? 30%. Now do it week after week. Small piles become big piles. Next slide, please. The point is you don't need a big account. Oh, this is an alert I gave out. Okay, so here you go. I'm sharing. And here is Caterpillar. August 20 calls. 210 strike price. Why? Because number 1, we're in the money. Number 2, I'm buying when I thought it was at the lowest today. Okay. Number 3, I put in a bid. I didn't pay the ask. My bid got hit. I bought 2 contracts. I spent just under $2,000. Right now, I think we're close, maybe $1,000 a contract. I'm not killing it today. My shit isn't instant gratification. It's not a slot machine. You don't put it in, pull the lever, and get rewarded right away. No, these are August 20th. So what's my end target for this, right? For Caterpillar, in a perfect world with an infrastructure bill and some other stuff, and we're going to build highways and roadways and bridges. Caterpillar, $245 a share by August 20th. If that happens, these options, which I paid $1,000 for, will be worth $3,500 each. Okay? That's a return. That's 250%. Next slide. All right? That's what you get from my platform. Oh, here it was. This is the elevator. See, I'm transparent as hell, man. How many people would show you one of their accounts? I trade 6 accounts. This is one of my 2 Robinhood accounts, okay? I hate Robinhood. Point was, you know where it opened up this morning? Down like 40%. So when I talk about selling STX and buying it, right? If I had sold the day before for $6,200 and bought STX when it was 50% down or 40% down this morning, you know where this account would be at? Closer to $9,000. So if you don't ride the elevator or escalator and you just made one smart move, you sell before close, you buy the next morning on the dip, you plan ahead. So if I sell these options for $2.60, they were the $86 strike, $2.60, and I buy them back for $2, I'm saving 60 cents or 30%. For an account like this, that's $2,000. Okay, next slide. I don't know if I have another slide. Oh, good. I don't. Okay, my point is I'm transparent as hell. Now, what I wanted to tell everybody over the weekend, I said to myself, or I said to you guys actually, or platform members, I apologize. I said, we're in XL. Tiger got beat up. I couldn't sell that shit. AI went down. Yes, STX looks good. The UVXY puts look good. But I'm so freaking diverse. And for some of you who have smaller accounts, you can't trade all 5 positions because you can't average down correctly. So when I talk about 5 positions, you're either picking and choosing, which isn't good. So I said I'm going to simplify my platform. I'm still going to give the lessons out. Still going to talk about the psychology of trading, but when I give an alert, it's going to be a sure damn thing. So this Caterpillar alert, if you're in there and we know how to average down and we have till August 20th, it's going to crush it, okay? My transparency trade, I'm down 10% today on those Carnival options, okay? But I'm looking for Carnival to spike. I'm looking for 3.5, something percent tomorrow. Let's go up 80%. I said there would be a strong Dow day, so that's what I'm looking for. I think there was correction today. Okay, things ended at the worst. Now, I'm a contrarian. Understand that. Anybody who doesn't know a contrarian, it means I think the opposite. So when shit looks the worst and you're like, cover, it's going down. What's going on? I think things are going to turn around. I'm like, there's the sun. It's coming out. So again, the last time I said that, the market threw up on itself like 400, 500 points. The next day it flipped around and went up 400, 500 points. See, that's the thing. The market's a little fickle. It's bipolar. So this isn't a stock picker's market for everybody. You have to know exactly what you want to do. My little girl in the background. So when it comes to that, you got to see demand in your stock. You have to see that people want your stock. And that's how you know it'll go up and spike. Sorrentino Therapeutic, I'm not in there anymore. SRNE, okay? It spiked today, and because the market was such shit, it sold off. But guess what? If you're there again, expect it to spike, okay? So anybody that wants to ask about that, I just saved you some time. Let's get to some questions. This is what I do now. I'll tell you about your positions, or I'll tell you to get the hell out of the stock. All right, skills. Looks to be beaten up of late. Yes, it's definitely beaten up. I wish I knew more about what they did. So let me find it and let me look at the chart. I'm pretty sure it's beaten up because I thought I saw it in the $16 range. Yes, I did. All right, the 5-day chart looks horrific, okay? Understand that all these stocks, now I'm going to put SKLZ skills in that same thing. I don't know if they have earnings yet. Let's just check it out. No, they do not have earnings. So any 4-letter stock that doesn't have earnings, even though the NASDAQ is at an all-time high, some of your stocks are beaten up, okay? So even some of your EV plays like Workhorse or CCIV or Skills or Plug or Blink, okay? You like these. You're like infrastructure. It should push them to the roof, but they don't have earnings. So those are the 4-letter stocks that are beaten up. Now, some that don't have earnings are pharmaceutical plays. Now, I hate biotech. I say it's like throwing a dart at the dartboard. But again, I'll mention SRNE, Sorrentino Therapeutics. That one looks good to boom, to explode. All right, so let me look at this. The 5-day looks like shit. So you're really counting on the market turning around. If the market isn't strong, like say today, right, like a wishy-washy, it's plus 50 points to where NASDAQ finished, minus 20, minus 30 points. That's my guess. I haven't looked. So let's look at the 1-month chart and see how much demand there isn't. Okay, so this stock has been sold off 5 straight days. You had a bit of a reversal for 2 days and then selling for 2 days. So it's kind of followed the uncertainty of the market. So if the market shows strength tomorrow, you're good. If not, literally, this one could probably drop another 60 cents, which is 3%. Okay, 60 cents doesn't seem like a lot, but 3% is 3%. So when I teach everybody that when you're part of my platform, it's all about the percent you gain, I would be more cautious here. That's just my honest truth. The reason I sold my STX that expires Friday, and we have, 3 more days, is just to err on the side of caution because I have so many other options in the same place. And I'm also, with STX, it's a Dow play, a 3-letter play, same with Carnival. And I threw about, $10,000 into Carnival, so I'm down like a G, okay? All right, next question. I don't want to overthrow money into the market. But if you have a Roth IRA, you're asking the wrong thing. Do you still use the same rules you teach, or do I change my strategy? All right, so if you have a retirement plan, I think it would both make sense. I would probably go a little harder, meaning I have a 25% rule for stock. So if you have $10,000 and you want to buy a position, you buy 25%. If it goes down 10%, you buy another 25%. It's the way of cost averaging down. However, if you're in a Roth IRA or some type of a retirement account where the money is just going to be there for 60 more years or 40 more years, I would say whatever money you have on the side, you want to put 10,000 in Apple, your first position would be like 33%. Boom. Then you wait. If it goes down a little, another 33%. That's how I would smartly average down or cost average in for a Roth IRA. But I mean, probably a better question for the accountant. I'm not an accountant. All right, let's get another question on there. Oh, shit, I thought my hair grew back. It did not. All right, next question, please. All right. Have I talked about EBON yet? Someone said I bought 24,000 shares at 11. You're wondering what I did. LOL. EBON is at $2.40. Mr. Jack, thank you for taking the time to ask such a ridiculous question. But make sure you give a thumbs down because that's why you're here, Mr. Jack, to ask a silly question like that. So I appreciate that because algorithms do well for me. But let's talk about EBON. Yeah, it's beating up. What is it, 240, 250? Sounds good to me. I mean, all the selling, look how many days it's had. And I mentioned this to my platform members. Now it's 16 out of the last 18 days have been outflow days for that stock. 16 out of 18, and it's at 240. So how much more beaten up is it going to be? So, yeah, I would love to have 24,000 shares. I would love to have like 60,000 shares or 80,000. All right, next question, please. Anyway, SEMO. I think somebody asked me about this the other day. I don't remember what I said about the stock. But hopefully you remember, and hopefully I was right. All right. SEMO. All right, yeah, consolidation today. It had 3 straight inflow days. Today was a tough day in the market. It did drop 1.79%. Light volume of 180,000. So $65 calls. You're still going to be out of the money. When do they expire? 7/16 this Friday. I bet they're damn cheap. Average 81 cents. You're now 20. Yeah, they're damn cheap. Can I check the charts? So here's the good news. All right, if the market sells off tomorrow, SIMO could go lower and have another outflow day. That's the bad news. The good news is if that happens tomorrow and it goes lower, buy yourself out till August, use double the amount of money. So if you used $81 and it's now $28, use $162, buy a contract out in August. That's how you average down. Now, the other bit of information is if it rebounds tomorrow and the market's strong tomorrow, and today was just consolidation for your stock, it could easily bounce north of $65. And tomorrow's only Wednesday. You have till Friday. It's only 28 cents. So you could definitely be profitable. So, yeah, you've got 2 options. You can buy another 2 contracts and average down, or then that would be $56. Or you can go out and you could do both and spend $162 out on an August contract. Good question, though, John. Those are the 2 options I would do, depending on how risky you want to be. If you want to be real risky, you have 3 days left. And you can see the bounce. The demand was there. Today was a bad day. They outflowed that stock. But, yeah, imagine if today was green and there was no bullshit in the market. That stock probably would have went higher. So that's a good one. You know what? I'm going to add it to my watch list just to see if I'm correct about it, to see if tomorrow is green, if the stock passes 65. Thank you. Next question. Hey, Ivan, thoughts on NTLA puts? 145. So you're probably right at the money. Stamp 320. So I think Stamp got bought out by a private equity company. So I'm not really sure. I thought they offered them $330 per share. I know people said that would sell off, but if that was a deal and it's in place, I don't see it really wavering too much. So you're probably going to lose money on the IV depending on where Stamp is right now. NTLA, I think it actually sold off a little today, which will be good for your puts. NTLA, again, gene editing company. Yeah, outflow for, get this, gene editing company, 6 out of the last 7 days for your first one has outflow, meaning there's more selling than buying. Now, the problem was institutions own about 88.5% of this stock. All right, so the people selling are retail, and then unfortunately, institutions are buying it up to keep the stock price hefty because they're sons of a bitches, man. All right, it's 143, down 3% today. I would look for it to break 140 on the downside tomorrow if you have a good day. If not, I'd be careful because this stock is, if it has a green day, morning meaning an inflow day, for this stock, you could see it pop like $8, okay? If you're on the wrong side on the wrong day, you're going to lose all of your money. So be careful, Ivan. Okay, let's look at Stamps, okay? STMP, right, stamps.com. It is 321. All right, it had outflow for 2 straight days, but it really hasn't moved. All right, let's look at the 1 day and see where, I mean, it basically followed the market. So what they're doing with it following the market is they're saying the initial offer was $330 because the market went down. They're thinking, okay, it's 323 or 321 or something like that. I'd be very careful. You're basically looking for both your positions for the market to have a shitty day. So if you wake up tomorrow and the UVXY is spiking 4% and your shit is throwing up, which is good for you, then congratulations, okay? I'm looking for the market to settle. I think it was oversold. I'm looking for three-letter stocks to rebound tomorrow. I'm looking for the UVXY to go down. So I'm looking to wake up and see the UVXY down 1.1%. That'll tell me it's going in the right direction, and I'll expect it to sell off 4.5% tomorrow, UVXY. So let me give you a prediction because I love freaking predictions. You all know that, right? I might sound Southern here because I said y'all. All right, so let's go UVXY. I looked up so many stocks. I got to go through them. Okay, so it is at 28.03. So let's just say $28. Now, if I say it's going to go down 5%, all right, it's at $28. 5% is $1.40, okay? So if it goes down $1.40 from $28, that would be $26.60, all right? So I think, and it's a little more right now, it's like 8 cents more. So I think it'll go down to $26.60 to $26.70, okay? UVXY. If that happens tomorrow, I'm selling. So yeah, I mean, you're going to see your puts. Let's see. All right, next question, man. All right, Matt, I'm still the man. T has been super beat up. Your average down to $1.22 and feel worse off for it. Is it worth a squeeze? I don't think it's worth a squeeze. Yes, and my positions on my spreadsheet, stocks, they will get hit, I believe, in 11 to 12 months. So since I started this platform, April, 4th or 12th or something like that, that gives me to April 12th of next year. So yeah, I think TYME, I think my price target is like $3 and change on that. So let's see where it's at right now. I haven't looked at it because I haven't seen the volume or the demand. So $1.12, I bought down. I averaged down when it was $1.15. I bought a shitload. So yeah, I think I'm in at $1.18 or 17. So I'm off. I mean, it's such light volume, and it's gone light volume since June 25th. And before June 25th, you have to go back to the beginning of June. So yeah, it's just a downtrend right now. I wouldn't be acquiring any more TYME, but if you can hold it, hold it. Now, if not, I talk about a lesson. When you're stepping in shit, step out. Meaning, if that's all the money you have in your account, say you have $2,000 and you have 1,000 tied up in this piece of shit, and you've just been holding it day after day, and people are like, yeah, I got 30%, I got 40%, I got 30%, I got 80%, and you're like, I'm still in this shit, I lost 2% today. You could step out of shit. You could sell your 1,000 shares. You can use your $1,200 to trade the options positions that we like. You could have bought one today. I mean, the point is, you can still follow the strategy with any amount of money. All right, the theory. Okay, next one. AI. 50, yeah, I have 16 of those calls, and I think I'm in for like $3. So I'm in for like $4,800, I think. Cut it or hold it. Yeah, you don't cut AI when it looks like such crap. But let me look at the chart because I did look at the chart today because I thought it was rebounding at one point. But you know what they did? They sold off. All right, I got to tell you, volume's crazy light again, and it has been crazy light since June 28th. So that's about 9 trading days? It's just been light. But now I told you guys, and I warned yesterday that we're going to start seeing light volume every day, which means if your stock has outflow, it can have a really bad day. If your stock has inflow, it can have a really good day. Meaning volume is light. So the volatility means it could spike, which means we could see STX go up to 90, 91. We could see AI go down. Right now it's 55.12. It's beat up. It was off 4% today. The daily chart, let me look at it. I mean, it looked like shit. I remember it opened up down, and I thought it was going to turn around 2 p.m. There was some heavy buying at 2 p.m. So, yeah, what am I going to do? Shit, I might actually have to throw a lot of money at this, and I might have to buy 32 positions tomorrow. So, yes, if you're part of my platform, ask me in the morning. I will tell you. I don't know where it's at right now, actually. I don't really care. I'm going to look for myself since I'm here. I'm doing this for you guys and me. All right, the puts went up. No shit because the stock went like shit today. So the calls. No, I'm probably going to leave it. I'd probably pay $1.40, which means I would need a break even of like $58 instead of $60. Let me look at the stock real quick and see if that's possible. Can I get a break? Yeah, you know what? I could definitely do that. I'm probably going to average down to the 55s tomorrow. All right, so that's what I'm going to do. I'm probably going to end up buying like 30 contracts of the $55 calls, which expire Friday. Now, understand, I'm breaking the rules because I teach on my platform you need at least 7 days till expiration or else it's not enough time. Now, there are some times where I will do something like that. I did it with XL. Remember, I threw $2,500 at it, and it almost looked like it was going to pay off today. XL went to like 708, and I'm like, okay, if XL goes to 740 something, I should be out of the position at a profit. And then XL threw up on itself and went back to 687, which is what it does. And again, the market was bad. So yes, I might take a risk there. I'm definitely holding. I wouldn't be selling when it goes down. It's $1.40 or something per contract. You're in for $1.79. You're only down 30 cents, which is probably like 24%. I would not average down because I tell you, you have to be down 50%. Now, you can't average down. Say it throws up on itself tomorrow morning and you're down 50%. You can't buy more than these because if it goes down tomorrow, tomorrow's already wasted, which means you only have Thursday and Friday, 2 days left to turn it around. And if it doesn't turn around, you're going to throw good money after bad. So that's why I have certain rules about averaging down. You have to go out and give yourself at least 7 days and you spend double the amount of money. If you don't know about it, I'm not going to give you the episodes anymore. I used to tell people where you could find whatever episode I was talking about averaging down. I don't give a shit. If you want to learn, you watch the videos. And if people are like, this dude is such a douche. Yeah, I'm an asshole at times. I can't believe more people, and I'll tell you right now, didn't watch my Friday video where I talked about spreadsheets and being more efficient. Because the one goal of me being on YouTube, the one goal of me being on my platform is to make you more efficient. So when I spoke about that YouTube on Friday, I expected 3,000 views, more than ever again, more than anything before. It had like 700. I don't give a shit. You don't want to spend the time. It doesn't hurt me. I know how to average down. I know how to use my spreadsheet. I know how when I miss the min entry, which I speak about, I know how to fix that next time so that I get, when you guys get amazed sometimes because I call the bottoms, how do you think I do it? I enter almost into a position. I'm like, blah, blah, blah. Wait, I look at my min entry from my spreadsheet. I'm like, dude, every time I play around with this stock, I miss by 14%. So rather than paying $3.50, I'll be like, what's 14% of that? All right, that's about like 49 cents. So rather than paying that, I'll go down 50 cents. And that's how I call the bottom. I'm not a freaking genius. I use spreadsheets. And if you don't use spreadsheets, you didn't watch my shit. Let's go on to another question. Hey, Matt, what do I think of Tiger August calls? All right, you're 250, 90%. You was not worried till you saw Tiger was down 2. All right, well, I'm assuming Tiger, I wouldn't worry about after hours. So what do I tell you about after hours? I tell you don't worry, less than 1% of the trading. Now, if there is news on Tiger after hours, then that could definitely be a bad thing. But let's look at it. And also, where's Tiger? I thought it was here. Oh, there it is. Down 3.7 after hours, down to 18. Let's see if it's real. Yeah, it's down. Yeah, someone's shorting the crap out of it. Yep, someone's been shorting the crap out of it. I mean, that's why we don't average down, man. But what do you got? You have August ones. Yes. I'd be cautious about averaging down. You want to call the bottom. So the first thing I would do is I'd look at other Chinese stocks, okay? So you want to look at other Chinese stocks and see if there's a complete sell-off after hours. And if there is, it would make sense. So DD's down 1%, XPeng 0.5%, NEO 0.5%. Okay, PDD is off 6%. Baidu is off 6%. So some shit is going on. Somebody's shorting the crap out of these three stocks, okay? Obviously, they're not happy with these Chinese stocks. Be cautious then. Everybody in a Chinese stock, you're getting it right here. Be freaking cautious. If it's after hours, and that's when the manipulation starts, after hours. I work for the hedge funds. I work for institutions. I know how to manipulate a market. So yes, PDD after hours looks like it's getting crushed. Baidu after hours look like it's getting crushed. They made DD go up, DI go up 11% today. I'm sure institutions were not happy about that. And what are they saying to the retail trader? This. That's why I'd be cautious. Please be cautious with Tiger. If you're down 8%, let's see what happens tomorrow. Give it a day or so to play out. And then if you need to average down, you have enough time because you've got August calls, August 20. Next question, please. All right, you bought Tilray on the dip yesterday. I'm dying here. You sold on the spike this morning for 70%. Thank you. So you didn't use a day trade. You saw it dip hard yesterday. Let's only assume you bought one contract, okay? And then you planned. You probably used your spreadsheet, and if you didn't, it definitely went on your spreadsheet. So you got out for 70%. Now, why am I saying use your spreadsheet? Because if we got out today at 70% and you could have got 100%, you want to use your spreadsheet. Now, Tilray went up hardly anything today. It was actually a big outflow day, but it went up a little. So it's either rounding the corner or I'd be careful with this one. It's probably rounding the corner. You did very well. I love when you guys secure profit. All right, other gurus are like, hey, da, da, da. And then people show them ridiculous returns. Hey, this is my Apple call you made. It's up 6,000%. But the person's holding forever and just got lucky. How many times do you ride it up and ride it down? So excellent for securing profit. I commend you for securing profit. I commend all of you. Today, I made an announcement on my platform, like, did anybody else do this? And like, instead of 2 people, literally like 20 people were like, I did this. I did this. I bought the dip. I sold. I'm up 40%. I'm selling at 60%. You have a plan. You buy and then you sell. Okay, next question. I know you have a lot of questions today about stocks. Oh my God, I love that hat. Yes, thank you, Ellie. All right, next question. All right, T. Farrow, do I ever recommend using margin? Thanks. I don't know. Do they let you trade options on margin? I know in my stock accounts I have margin, but I have some pretty hefty positions, so I become leveraged. If I like the stock, yes, I use margin, but I also have a lot of money on the side. So if you're following my platform, here we go right now. Ready? Say you only have $1,000. I'd rather you only be in one position. You buy a contract for $180. You have $820 on the side. You need to average down. You spend $200 more. The point is you have money on the side to either find a new position or average down. So margin, I don't like it. It's like a credit card. I like using cash. Okay? I don't like the government tracking my shit, but that's number one. But I don't like paying interest on credit cards. So if you don't pay them off that month, which I do, but I don't really even like credit cards. So I like cash and I like cash accounts. That's what I like to trade. Some of my stock counts long-term are on margin. They're only levered like, I don't even know, 2.5 times. All right, next question, please. Margin's just careful, man. Hey, Matt, do I think DAL has hit bottom? So it's tough. I think Delta is better than the cruise ships. So I think airlines are better than the cruise ships. I think Boeing took a hit today. Boeing took a hit, which made the airlines take a hit. I forgot what Boeing's news was, but I think they dropped like 10 points. Let me just see where Boeing was. Let's see if it rebounded. Because Boeing, 10 exactly off 10 points today. Huge outflow day, huge selling. It hasn't been this low since May 13th. Now, when that happened in May, there were 6 or 7 straight inflow days. Okay, so I expect the airlines to pick up. I mean, I sound like a freaking broken record, though. So I'm not going to talk about that. Again, I went into a Carnival position. That's where I put my money. I was thinking about Delta. I was thinking about JetBlue. They were all around the same. JetBlue was off like 4% or 3.5%. Delta was off 3 to 3.5%. And Carnival was off where I saw the base at like 23. And I'm like, I know its baseline is 23. So I think I'm going to go with that one. All right, next question. Yeah, so I think they all can turn around. You need a strong Dow day. So maybe if the 10-year spikes, which it is, let's look where the 10-year is right now. When the 10-year spikes, it makes it more expensive. Okay, now it's at 142.3. It was at 141. So the 10-year went up 5, almost 6 basis points. All right, it was 136. Now it's 142.3. So what's going to happen? The Fed's going to talk tomorrow. So if the Fed says anything that's surprising, it might go up higher. If that happens, the market might throw up on itself. So when I speak about the UVXY positions or any other positions, understand you better have the 10-year on your tracker tomorrow. Because what we saw today is when it spiked 4 basis points, the market threw up on itself at 1 o'clock. So if you're watching that on your phone, go to marketwatch.com. You go, Siri, 10-year note. Boom, there it is. It's at 142.3. See what it is when you wake up. If you see 148 or something like that, the markets or the futures are probably shit. The UVXY is probably spiking, and you should be happy to have money on the side. And then if you're part of my platform, we'll talk about what to do tomorrow. Okay? Best case scenario, the 10-year goes down under 140 back to 138, 137.5, whatever it is. Futures are green, and we'll see how it plays out. Now, obviously, it's not going to be one side or the other, but we'll see what the gray matter is in the mix in the middle. Thank you for all you've done. Did you go over both SoFi and AI? I went over AI. So AI just looks beat up. I mean, it is beat up. If you're investing longer term in AI, I like the stock. I think it should double. AI is at what, $55? I've got a price target of 114, which I think will happen within 12 months, okay? Probably 11 months, okay? Snapshot this shit. All right, now, if you're in AI options and they expire this week, like me, I mentioned before, I'm going to do something risky, and I'm probably going to buy 30 more contracts tomorrow at like $1.30. I think it's $1.30 to $1.40. I might assume like a morning dip or something like that, and I might put in a bid for like 95 cents. That way, if I get it and I buy 30 more, I'm spending about $2,700 instead of a lot of money. Okay, if I just pay the ask right now at $1.30 to $1.40 and I buy 30 more, that's $4,200. So if I'm taking a risk and it's going down, I'm buying on the way down, I'm risking $2,700 versus like $4,500, okay? $4,200. Huge difference. could save $1,700, $1,800. Even on the smaller positions, you save $180, $200. I don't care if you have one option. When I tell you to secure a better entry by 5 or 10 cents, instead of paying $270, put in the bid for $260, see if it gets hit, add it to your spreadsheet. That's $10, okay? On the way out, if you save $10 or $20, that's $30. That's 10% of a trade. So if you don't understand it, you don't know about my spreadsheet, sorry. All right, Sophie. Sophie got beat up again. Was a meme stock. I used it for a day trade. Some people stayed in it a little longer. It did show somewhat of a rebound at 1642 yesterday. But again, today was a shitty day. So what are you expecting? Definitely outflow on Sophie, off close to 2.5%, 42 cents. So it had some backing like 50 cents ago. Unfortunately, it was a shitty day. Volume was 16 million, which kind of seems a little light for this stock. I think it does a little more than that. So, yeah, I mean, nothing you can control. Again, you need a green day in the market. If the market, unfortunately, throws up on itself tomorrow and you get the worst case scenario, your options, my options for AI. But see, that's why I didn't buy the options yet. If the market throws up on itself tomorrow, I'm not averaging down. I'm not spending $2,700, okay? If I think the market can easily dip and then rebound, I'll spend the $2,700. If the market's green in the morning, then I'm not averaging down on AI because it'll be up 2%, pre-market. So we got to see what happens. I can't predict the market. That's why I think it's funny when these gurus come on and they talk about certain stocks and they're like, yeah, the squeeze is coming. Here's what's going to happen. It's bullshit. It's not happening. All right, next question, please. You got to call this shit live. All right, thoughts A, B, C, L, and C. I don't know either one of those. Puts. All right, so you have calls on one and puts on the other. All right, well, you like to diversify. That's cool. I mean, usually when I think one thing is happening, it's hard for me to, it's a biotech company. I hate these. The first one looks terrible. ABCL. It looks like it goes down every day and you're dying of like 1,000 paper cuts. Today it went down 4%. Even on inflow days, it looks like it ends up going down the next day. So, yes, if there is demand, maybe this shit could pop. Let me look at the 3-month. I mean, it's been going down since $33. It's $34. It's 17.5. So you're asking me if it's bottomed out yet. There is some inflow, but that has not bottomed out yet. If you're buying calls on that, you better be damn sure you're going to be right, and you better buy out a few months. If you buy out till September or October or November calls, and you're right finally, and it spikes $4, $5, $8, $10, it might spike all the way back up to $29, which means you get $12 on it, which means your options would kill it. But you better give yourself more than enough time. All right, CECE, I don't know that stock either. CECE. Ugh, I don't even know where you guys come up with these stocks. There's demand. There was selling, consolidation. Yeah, I mean, I don't like this stock. The 3-month looks like shit. The best that you're going to get out of it, maybe be like 4% if it spikes to 768, and it was 745 today. So I'd rather you be out of this stock. It does not look like a heavy demand stock. It has light volume, 66,000. Its market cap is 258. Outstanding shares, 35. So I get it. Maybe it's a shorted stock. Is that why you're bringing it up? I don't like it. Sometimes shorted stocks, the charts look the worst. So if either of these two are heavily shorted, I reserve the right to change my mind. The point is, I'm only basing it off the charts. That's what I do. Next question, please. Matt, gosh, tomorrow, the API crude oil, thoughts on it? Again, I have no thoughts. Someone asked me about the CPI yesterday. I had no thoughts until the numbers came out. Now, I actually had thoughts. The thoughts were the numbers are going to be high, and no one's really going to give a shit, or they really shouldn't give a shit. And I believe I'm correct, and I believe most of the selling today was from retail investors that caused their own death. That's as simple as that. Retail investors got scared, saw the market going down, continue to sell. You saw certain stocks that people were buying, and you'll see huge spikes in volume. So I don't know. Until they say something about oil and I can see the direction of the price of oil, I don't know the effect that it's going to have on the market. Next question, please. All right, UVXY, but it's good. Yeah, I don't know. I entered him at the end of the day, and then somebody made fun of me. Oh, that goofball made fun of me again. Yeah, he can suck a you-know-what. All right, UVXY, let's see where we're at right now. Again, I told you where I expect to be tomorrow. I don't really care about after-hours movement. There's no real movement, 0.25% down. Who cares? I mean, it could be up 2% one way or the other after hours. I don't give a shit about right now until 8 p.m. I'll tell you what's important. What's important is when you wake up at 4 o'clock in the morning and 5 o'clock in the morning where you see it. Because if it's off 1.5%, I'm going to be right, and it's dropping 5%. If I'm wrong and it's up 1.8, that means it's probably going to go up by 9:30 a.m. to like 3%, okay? And then what's going to happen tomorrow is it'll probably spike 6 or 8%. If that does, I've only got one position. I've got about 12 contracts open. I'm looking to buy about 50 to 200 more. If it spikes, always have a strategy. It's like chess, okay? Somebody says to me, when you buy an option contract, what are you doing? The first thing I'm doing when I buy a contract for $400 is I'm setting my strike price, or I'm setting my ask price at $650 or something like that to make like 58%. If it sells. If it goes the opposite direction, I log on and it says I'm down 28%. Then I said to myself, okay, if it drops more, how far can it drop? What's the max it might drop? And I plan for the max. So yes, I have one contract, but I'll be buying 2 more if it drops to a certain number. It's planning ahead so I don't sit in front of my phone actually hoping some shit's going to drop that I own. I own one contract. I'm like, go down another 10 cents. Yes, I bought 2 more contracts. No, I put in the order according to math. I put in the order according to my spreadsheet. If it executes, that's great. I trade without emotion. That's what I'm teaching. So anybody that's not part of my platform, or if you are part of my platform, or if you're new and you're watching right now, please understand this. The platform is there to educate you. The platform is there to share with you what I see and share lessons about trading so you don't have to experience the hardship, okay? The platform is there to teach you how to average down the right way and to teach you to see volume and see demand and come up with your own stocks. And you can say, yes, I love that industry or that sector. And then you use my rules. You enter the position. It goes down. You enter into more. You plan ahead. Instead of all these times where you guys sit on the side and you're watching your shit go up and down and your portfolio change, whatever, you're an AMC, you don't even do anything because you don't buy any shares because you're all in, or you're all in with GameStop and you just look at it 3% every day, one way or the other. That's bullshit. That's not trading. All right, next question, please. Airbnb, right? A, B, and B. All right. Okay. First off, I like that you have October calls, because you're obviously thinking longer term. Now, if you own stock, and Airbnb is very expensive stock, I think it's like 150, 160, something like that. If you bought 100 shares and you're correct, you might be able to make like $1,500. If you're correct about the options and you go in for like what, $1,000 bucks, something like that, you could probably make $2,000. You're risking less. You're risking like what, one eighth of the amount of money. So let me look up Airbnb. Airbnb. All right. Let's look at the 1 month chart. That's what I like to look at. Okay, did you go into that position today? Hopefully you did, because it definitely sold off the last 2 days, okay? It seems to have a head and shoulders where it'll at least go to 153. So the fact that you gave yourself more than enough time, if you entered into today, let's see how low it was today. It was as low as 143, so it's a little higher than that. It looks like it's rebounding a little, but again, that's micro. I like to look wider. So looking wider, if the Dow rebounds, and it's going to rebound by October. If I'm telling you I like Carnival to be at $50 and I like Delta to be at $62, yes, Airbnb is going to be north of 150 easy. So yes, if you're a big believer that the Dow is going to recover and that tech will have maybe a bit of a struggle when the Dow reopens and people are on cruises and airlines and the vaccine numbers are, up and COVID is down, then yes, Airbnb should do fine. Next question. I like that you bought out and you're in the money. Matt, how do I feel about plug options? Expiring Friday, $1.20 to get a spike. It didn't come. You're close to 31 cents. Okay, my plug options are for September. I bought my plug options at $25 or when it was actually under. So understand, I haven't entered into any positions in plug in probably over 5 weeks, okay? Now, I understand you're not asking about my positions. You're asking about yours. I just like to clarify. So plug for 2 days and actually 3 days, when the market looks to rebound, it actually looks like it's doing and going to do a nice reverse curve. And then what happens is, it looks like shit right now. 27.82 off of $1.20. So we were high as what? 28, 20. It just went down from the start, I guess, off of $1.20. Wow. So 28, 29. Yeah. It opened lower and went lower. So yes, I'm glad you didn't average down. See, there's some things I talk about throwing good money after bad money. Now here it is, okay? You have an option that expires in 3 days, okay? It's worth $30 per option, or in this case, 31. I've mentioned multiple times, if you have an option worth $30, somebody's telling you that it's probably going to be shit. Now, the chances are it's going to be shit, probably 80 or 85%. Now, what you can do is you technically could buy 3 more contracts or 3 times what you have. So if you have one at 120 and you buy 3 more at 30 cents each tomorrow. Let's just assume it's 30 because I did for the other example. Now you're spending $90. Now you're in for 210. So you've got 4 contracts. You're in for 210. That means your break-even point is 52.5 cents. So you buy it tomorrow for $30, right? You buy 3 of them, and then you put in the sell order right away for like, I don't know, 55 cents. And what happens is you make 5% if it sells. You don't need it to go back to $1.20. You basically need Plug to have a spike in the morning, okay? You're buying at the market open. So someone's selling to you as Plug does this at the open. Then you're hoping you better be quick. You're turning around. You're saying, sell my options, sell my 4 contracts because you have 1 and 3. Sell my 4 contracts for 55 cents each, which would be $220. You're in for 210 because you bought 3 at 30 and 1 at 120, and you're going to sell them for 220. You'll make $10, which is like what, 5%, right? Anyway, that's a good strategy to have. It's risky. The other option is you average out by going out till September, like me, and you spend double the amount of money. Meaning, if you spent 120, you would spend 240. If you have 10 contracts, you spend 1,200, you'd spend 2,400. I just want you to double your initial investment if you go out to like September, like I did. All right, next question, please. Goldman Sachs, not good earnings, but good news, got crushed today. Yeah, Goldman Sachs, there was whispers. I think I told you this yesterday or the day before on YouTube. Somebody mentioned banks, and I said, here are the whispers from the street. And let's remember, I do have friends on Wall Street, okay? So the whispers were Goldman Sachs was not going to perform that well. The whispers were, what was it, JP Morgan, I think. I don't remember what I said the other day. I spoke to, anyway, if you want, you go back, you watch it. I mean, I tell you guys what I know when I know it. So, yeah, I don't want to comment on Goldman Sachs because I already did. Next question, comment, please. Can I please talk about SLB? Sure. I can talk about anything once I look it up. SLB, and you're so kind to ask that way. Schlumberger, right? So let's see. It's oil company. It really depends. Now, it's either bottomed with the Dow, so you either think, like me, the Dow in oil is at the worst, and if it rebounds, it could definitely pop 4% over the next day or two. Now, you probably lost 2% today. Yes, you lost 2% today, but it could pop 4%. If you're wrong, and the Dow drops further. And again, if the Dow drops further, I would sell all my Dow stocks. If the Dow drops further, you could look for a 4 or 5% mini correction. And I don't want my shit to go down 4 or 5%. I don't want to take a bath. So if I see that happening tomorrow, I will exit out. I will alert. Any 3-letter stocks, be cautious. I'm positive. I'm bullish. I'm hoping the UVXY goes down. But again, if the UVXY is spiking and the pre-market futures are throwing up on themselves, I would be extra careful. So let me look at the 1 month here. I mean, I'm assuming they're all going to look the same. They all look like almost airplane stocks. Oil stocks look similar. Most Dow stocks look similar, except AMC doesn't look similar because every day it sells off. Yeah, so there is demand for this one. Today could be consolidation. This one could bounce pretty good, maybe even to like $32 or $33 within a couple days. All right, next question, please. JKS looks strong, but not sure about solar. Okay, again, you're talking about a Dow stock, JKS, solar stock, an energy play. So again, where the last questions was about oil, this is more green energy. Guess what? They're going to move together. So green energy, you're actually rooting for oil. And oil, you're rooting for green energy. And you're both rooting for the Dow, and you're rooting for a strong market. So let's look up JKS. I mean, it's crazy. Sometimes you don't even think it, and you're like, I don't care what this other part of the market does, but it really does impact your stocks. JKS, yeah, more inflow today. Chart looks beautiful. It looks like steps, and you probably see this with like First Solar. Yeah, this stock looks awesome. It's telling me unusual activity. I bet it's a call, bearish, which means, oh yeah, it's a call sweep. Okay, so what this means is when you hear bearish, don't think that you think that it's bearish on the market, that they hate JKS. No, what they say when they say bearish or bullish on the either call or put sweeps, when it's a call sweep, it's bullish, okay? When it's a put sweep, it's bearish on the stock. When they mention it's a bearish call, okay, that means the person that's buying the calls is putting out a bid. They're not paying the ask. If they're bullish on the calls, that's very bullish because that means they're sweeping every option they can eat and they're paying the ask for everything. So when you read bearish call, don't get confused, all right? It used to confuse me. Bearish means They're only putting in a bid, and they're hoping that people sell them calls, okay? That's what the difference is. Stock looks great, RL. You mentioned a good stock the other day. So anybody that's here and sees RL every day, you should look at what he says. All right, let's get one more stock up there. How about that, man? All right, you're due to Bitcoin stocks. I know you mentioned an article about 2 trillion. Yes. Just because large institutions buy certain stocks, and MSTR is like the Fort Knox of stocks. Understand this. It doesn't mean Bitcoin's going down. Yeah, Bitcoin needs to hold 32,000. If it holds 32,000, it's going to go up, and it'll probably happen towards the end of July or August. Understand all cryptos are beating up. If you've been with me this far, please hit the like button, subscribe, share this video. I'll tweet it out. Share it. Let's pay it forward. I only charge $3.49, and YouTube is free. Have a good night, everybody. Thank you.